Hello and welcome to, sorry for that double introduction there. Welcome to another Smaulgld live stream. Tonight is Monday night, October 29th, 2018. Tonight's episode, JP Morgan and Brinks gold COMEX vaults shrink. Now the other night we talked about the JP Morgan and Brinks silver vaults along with other silver stockpiles increasing. Here tonight we're going to take a look at the gold vaults, the COMEX gold vaults of JP Morgan, Brinks, and a cumulative look at the gold vaults at COMEX. But first, let's take a look at what happened to the gold and silver price. Before we do that, because those are in the charts, let's do the non-chart crypto markets. Now the crypto markets have been very interesting. We've been talking for a few months now about the coming institutional products through Bakkt. If you haven't watched it, you can look at last night's live stream. I spent about an hour going through all of the recent institutional Wall Street regulated products, including ETFs, trading platforms, and the like, that are set to launch within either weeks or months. And one of my theories on all that is that it's what Wall Street needs in order to keep the party going, because the equity market is pretty much on its last legs and there's not enough room to do another round of QE probably, or cut rates again. The earnings aren't really going to drive this thing much further. I mean, 8 years is a good run in an equity bull market. The real estate prices, you can't inflate them beyond the ability of people to buy houses, no matter how interesting you make the credit package. And by the way, the credit package is worse now because mortgage rates are going up. So there is a very big chance that the asset price inflation that we've had, this everything bubble, has pretty much run its course. And of course, we know that bubbles live on bubbles and they have to keep going. So I've been arguing that they're going to orchestrate a crypto bubble. Not just out of the fact that they had missed the first bubble, and we went through that last night when the price rose, not just the price of Bitcoin, Litecoin, and other cryptocurrencies rising, but also the fact that they missed out on the trading fees, they missed out on the ICO fees, they got none of those. So now they're trying to position themselves so they can get the fees, and also obviously they need to get the price appreciation, the client work, and so on. So what's happened now with the cryptocurrencies is they had been pretty stable for a long time, and the only time that they fell off their stability is when we had those jolts in the last month. You know, you've had the stock market have a few big down days, and the Bitcoin, the Litecoin, and those coins, they don't really fall immediately with the stock market. They seem to be not correlated at all. However, what we do see, and we've seen this even before recently, that you'll have these smash downs, and they're much worse than the smash downs that you'll ever see in the gold and silver market. You'll see, boom, bam, the price of Bitcoin will go down 3, 7, 8%, just in one fell swoop. And people used to explain that as Mt. Gox selling. But at the same time that those drops would happen, you'd see the exact same timing of a drop in Ethereum, a drop in Litecoin, EOS. All the cryptos would just drop at the same time. And we saw that again today, early this morning. Bitcoin got smashed down, then the Litecoin, all of them had the same drop at the same time, varying amounts of the drop. And of course, the Bitcoin drop is the least severe because it's the largest. And then cryptocurrencies like Litecoin and others fell more. So I think that's just to keep the crypto prices in line, because you can't move Wall Street and all the equity players out of equities if they perceive that they're going to move them out of equities into a higher priced or overpriced crypto. So what I think they've done is that the crypto prices, especially Bitcoin, has gone back down from, it got up to 20,000, went back down to 6,200, 6,100, and it's it hit that low early in February at 6,200 this year. It's gone up and down, but has not gone below 6,000. And I think that's the mark where they feel comfortable, unless the stock market falls further, that they can tell clients, look, you know, it went to 20,000 last year. It's rationalized. They can make up whatever the reason at this price, and therefore it's a good time to buy. You know, it can go back up to 20,000, and I'm sure they can make it go up to 20,000 through the trading mechanisms that they have. So Bitcoin at 62.68. Now that's only down 2.19%, but there was a big fall. It's come back a bit. You know, it had fallen 100 and some odd dollars. Bitcoin Cash, though, a little more pronounced, 5.33% down at 414. And Ethereum down below 200 at 194.66, down 4%. Litecoin down 5.61%, under $50, down to 48.60. And Ethereum Classic just at $9, down 5.57. So you're seeing a bit of a fall in the cryptocurrencies. All right, let's move on now to what happened in the gold and silver. So let's take a look at what happened in our gold and silver markets today. There's your Smaulgld mug. Say goodbye to those. If you want a Smaulgld mug, you got to go to smaulgld.com and order them with free shipping. So let's see now what we've got for the gold and silver markets. Now today on Wall Street was not a good day. It was a bad day, and we did not get the movements in the move to the safe haven of gold and silver. In fact, the dollar got that bid today. The dollar index is up to 96.66. The gold price opened up. It was basically a down day all day, though. It really did not make it. 1233. The high was 1235. Got down to 1224. Closed at 1229. It's currently in the aftermarket at 1229, give or take 50 cents or so. So gold was down 0.27%. You know, down $3.34. Not a big deal, but not the type of move you'd expect if the stock market's having difficulties. Dow Jones down 245%. It's down 1%. NASDAQ down another 116 points, down 1.63%. S&P down 17 points, down 0.66%. So gold held up, I suppose. I mean, you didn't take the same 1% loss. You took a 0.25% loss. So in that sense, I suppose gold preserved your wealth. Not the case over with the gray metal, the silver. We had a down day, losing more than the stock market, down 1.44%. So you see the silver market, we're back down to 1446. Had a little bit of a peak early in the morning at 1474, but ended up down 21 cents. 21 cents sounds like nothing, but it's a big deal. First, as you can see, it's almost 1.5% in a day, and down 21 cents. So what did that do for the gold-silver ratio? It certainly didn't help all those people who keep saying it's unsustainable. It's going to go to its natural ratio, 16-1. Silver is rarer than gold. We cannot live our lives without silver. It is at the bottom of the pyramid. Silver is the most important asset in the world. Let's see, the gold-silver ratio. It's unsustainable. Well, there it is, unsustainably high. 85.12. There you go. So the gold-silver ratio continues to climb higher, and I expect it to continue to climb higher until, gold actually gets into a sustained bull rally and silver starts to chase it. We haven't seen that yet, and that's why the gold-silver ratio has climbed steadily since 2013 from about 55-1 all the way up now to 85-1. All along we heard, time to buy silver. The gold-silver ratio is now at 60-1, and it's unsustainable. It's at 71, and it's unsustainable. And it's at 80-1 when the natural ratio is 9-1. They're pulling it out of the ground at that ratio. Oh, well, for years, people will say the same thing. I guess I've been saying the same thing about them saying the same thing for years. Okay, so now we've got the gold-silver ratio out of the way. Let's take a look before we move on to our JP Morgan and Brinks stuff. Let's take a look at Dow versus the gold. So the gold versus the Dow Jones ratio there, and we can see that we're still not catching up because we did a little catch up today. The chart will show that tomorrow, but we're still, as of yesterday, or as of not yesterday, but Friday, over 20-1, and that's reflected by the blue line there. 1-to-1 would mean that the gold price would be $24,000, and we're not there. And generally, if you ever get there, that's when you sell your gold. People have their targets, but I don't think 1-to-1 is very rare. I think if you got to single digits, that's when people would think that it would mean that on a relative basis that stocks were cheap. Right now, stocks are still expensive compared to gold. There's your. We track that every night. It may not change very much, but it's worth taking a look at. Now, the other one before we move on to our top story. Remember, gold back yuan, game changer. China to crush the dollar. They're going to introduce the gold back yuan. No, they're going to create tremendous gold demand and drain the LBMA. And China's controlling the gold price. China's got it going on. Social credit scores notwithstanding. Debt to GDP at 300% notwithstanding. Well, there is one way of looking at it. That is the Chinese renminbi, the game-changing reserve currency of the world. The Chinese yuan. There's the dollar versus the yuan. And it's basically, since the introduction of that phony never was ever going to happen, gold-backed yuan. Go long the yuan, go long gold, we heard, because the dollar's toast. The dollar is toilet paper. No one wants the dollar. The BRICS are going to crush the dollar. They have had it. Do you know about the Belt and Road? China is going to take over the world, and the dollar is going to go away one day, and there will be end of dollar hegemony, and everyone will be speaking Mandarin. Okay. Now, there is from 630, it's all the way up to 695. Another way of looking at it is how much is the yuan versus the dollar, and that's just the reverse of that chart, and I'll just give you a look at that. That shows a decline in the renminbi since the introduction of the gold back yuan game changer. I mean, some of these people come up with this stuff. Not only is it nonsense, like buy silver because the gold silver ratio, it is not only based on faulty reasoning, it actually goes in the opposite direction. So people yelling buy silver, and then the gold, because of the gold silver ratio, and it goes 40% in the other direction. Same here. China to crush the dollar. Oh, you'll see. It's the old, he's not early, he's just wrong. I mean, anyway. All right, let's move on from that. There's only so much mockery one can stand for one evening. But let's take a look at these charts for the gold, and we're gonna look at the gold tonight. We have been let's take a look at the silver, because people get excited when they see lots of silver piling up in the COMEX vault. We saw that last night. Let's do a repeat. There's your JP Morgan silver vault. They're stacking silver. We don't know who owns this silver. This is probably client silver. And any talk of any more silver than this, Silver Eagles or silver maple leafs that they have, it's just not based on anything other than speculation. But here you go. You can see that the JP Morgan vault has 148 million ounces. It's gone straight up. And then we looked at the Brinks vault, and no one's come up with a conspiracy theory on that. Brinks is stacking silver. Brinks is a game changer. I mean, you can make a nice story if someone wants to make one up here. Look at that, 50 million ounces in the Brinks depository, up from 16 million just in 2016. They must know what's going on. They know what's coming. They're stacking the shiny. So there's Brinks, and they're adding their stockpile. This is client silver. This isn't Brinks silver. And then let's look at COMEX silver for contrast. This is all the silver and all the different COMEX approved vaults, and you can see it's a lot. So you can't have the argument that COMEX is going to default because they don't have enough silver to cover their trades. And then when they do, it's going to be game over when everyone stands for delivery. They do stand for delivery, you know, and then it's going to be game over, and you won't be able to find silver anywhere. Well, it looks like you can't have these two competing thoughts, because if there's nearly 300 million ounces in there, you have to do a lot of standing for delivery to to get rid of all that silver. So it's either there's a lot of silver in the COMEX vaults and JP Morgan is stacking it because they know it's coming and they're on the other side of the trade, whatever nonsense you want to believe about that, or there is no silver left in COMEX and it is going to default immediately. It is imminent. Okay, well, there you go. There's your 290 million ounces of silver in the COMEX vaults. Now, the gold situation is pretty much the exact opposite. And you draw whatever conclusions you want from that. But it is interesting that you have, we just saw the Brinks silver skyrocketing, the amount of silver they have. But let's look at the Brinks gold. The Brinks gold, they only have 227,000 ounces. They used to have 1.2 million plus ounces back in 2017. Beginning of this year, they had, you know, maybe 500,000, 400,000 ounces. So what's going on? Well, it's just the normal ebb and flows of the metals, but it is interesting that their gold stockpile has fallen in the last year, and their silver continues to rise. And let's take a look over at JP Morgan, and we've just seen their silver holdings in their vault explode, while their gold is heading in the opposite direction. And there is JP Morgan. Now, this year it was pretty much peaking out from recent years, from about 2013, and it was at about 2.2 million. It's down now to 1.372. So just in the past 4 months. Now, it's interesting if you see patterns. You see this to the far right, the gold holdings going down. The price of gold went down exactly like that during that time period. I don't know if that means anything. I doubt it. But again, people see correlations and they assume some type of causation. But I'm just pointing it out. All right, and now let's take a look at overall COMEX. But before we do, there's one thing to note, that HSBC is the big holder of gold in the COMEX vaults. And now you can see that, well, not to worry about Brinks and JP Morgan so much, because these guys got nearly 6 million ounces, and it's not really going down much. It's gone down a bit since the beginning of the year when they had about 6.4 million ounces, but it's up significantly from just 2 years ago when it was in the 4 and 4.5 million range. So there's enough gold at COMEX. But the interesting thing about the gold at COMEX is it may be eligible for sale, but it doesn't look like much of it is registered. In fact, I think they've only registered about 140,000 ounces. So if someone stands for delivery, then it's going to be game over for the COMEX. We're not going to go through why that is a complete nonsense story. In fact, that is one of the oldest stories that they trot out every couple of years. There's a video on it that goes to 2014 that starts back in 2002 with all these predictions of an imminent COMEX default. And since 2014, it's been trotted out numerous times. It gets thrown out. People forget about it, so they bring it out about every 18 months. And they point to the unsustainable levels of gold or silver in the COMEX. And here you go. But here you could see there's 8.39 million ounces. It's a lot of gold. Now, very little of it's registered. You can see that the line's diverting there. It's only 140,000 ounces. But again, this gold or silver, whatever chart you're looking at, can easily be registered because it's in the form that's eligible to be sold if someone wants to stand for delivery. And briefly, we know that the COMEX traders aren't there to stand for delivery for the most part. Most of them are there. They're traders. They know how to trade the game up and down and up and down. And they just keep shaving the points, and they're making their money in fiat. Others are there probably just to stabilize the market. But the point is that they're not there to buy gold or silver. They're there to buy gold and silver contracts which just also happen to be backed by a certain amount of gold or silver, and certainly enough gold or silver that if people do want to stand for delivery and take delivery, that it's there. But they also know if it's not there, they're going to get cash, and that's why they're there. And by the way, there's no point making a big stink out of it if you're a rational trader. If you really, 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 really have to have the gold, and somehow COMEX doesn't have it, that doesn't mean game over and there's no gold left and the vaults are empty. No, it just means there's no gold available at COMEX. So if you had a trade and you made $250,000, you could take your cash. I guarantee you can go find that gold somewhere very quickly in a brokered transaction. So all these stories about game over. Anyway, all right. Well, that's it for tonight. And let's just take a look at who we got in the comments. We got Pablo Pina, JP Morgan, and Breeze saying gold COMEX vaults shrinking. Yeah, game changer it is. Hello. Okay. JP Morgan today I read has more programmers than Facebook. I wouldn't doubt it. And I think that these banks, they see crypto gold. They don't care what it is. They're not necessarily interested in global warming either. They want carbon credits. What banks like the most is anything that you can digitize and not have to have collateral or security. Housing bubble is not a good thing. They got stuck with houses they didn't want. You can't. They thought they were able to monetize them the way they did, securitize them, wrap them up into collateralized securities and all that kind of stuff. But at the end of the day, they were backed by something that they didn't want. They had to pay tax on. There was a lot of social issues, foreclosures. They don't want that. Best thing for bankers are things like carbon tax credits. They don't exist. You just invent them. You trade them. You do derivatives off of them. You sell them. You offer them to people who need them. And they're just invented. And that's what crypto is. The same thing. They love that kind of stuff because you don't have to worry about earnings. You don't have to worry about collateral. So yeah, having programmers, programmable money is the greatest thing they can do. Invent crypto coins, invent stable coins, invent trading algorithms. That's why they have all these programmers. Why would JP Morgan invest in Litecoin or another blockchain when they can make their own? Because, first of all, making your own, you can't make your own. What Bitcoin and Litecoin have are voluntary users and miners on the blockchain that give it the decentralized character, which makes it more secure. You could set up a blockchain. A blockchain isn't anything unique. It's the idea of the system you have around it where it's decentralized. You can make up your own, and they're going to, but it could be hacked, and it won't have the same buy-in. But again, Ripple is like that, and that hasn't stopped people from bidding that up. But so you can, but it's not the same thing. And also, the advantage for the bankers why they would invest in these other private coins, which don't have any owners, like Litecoin or Bitcoin or Ethereum. Well, not so much Ethereum because it doesn't have a cap, is that they know that there's a mathematical cap on their issuance. So they know that they can boost that up just based on supply demand. There's only 21 Bitcoin ever to be mined. They know they've lost 4 or 5 million of them. 18 million have already been mined. You can do the math and figure out it wouldn't take much if everyone wanted a Bitcoin that's in the investor community to get one to why the price might rise. Yep, just Augusta Broken is back. Welcome from the Netherlands. Just central banks playing their games. I would imagine all these markets, that's what it is. That's what it's become. They've become captive markets. I don't see how that's changing at all. Jeffrey Gotts, what do you think about the stock market? Is a global reset time or will be back after the election? I don't go for this global reset stuff. I never have. Always hear SDR and all this other nonsense, but I don't think that's going to happen. The real issue is, my theory is that they're going to try to keep the stock market levels where they can. But if they can't, remember, this idea they want to collapse this system. Well, that only works. Remember, the reason, if you believe the theory that they collapsed the system in 2008, I don't think they necessarily did it on purpose. But let's say they did it on purpose. Well, it worked out for them, didn't it? Why? Because they had either a plan or a plan developed where they wouldn't get harmed. It became very apparent by early 2009 that, whoa, the banks are going to come out of this thing all right. And they're actually, the bankers are going to get bonuses for 2008. And they managed to reflate everything. And they managed to buy all the stock market assets on the cheap. And they drove those back up. And the people that had assets in 2006, 7, and 8, they may have lost a bit of their portfolio in 2008, 9, but they managed to boost them right back up. So if they're going to collapse this particular system, Jeffrey, on purpose, they're not going to do it to shoot themselves in the foot. They're not going to do it to spite themselves or even for political reasons. They got to make sure that they got something else lined up so that they're the first ones in and they can make a fortune. And I believe that if it happens naturally or they plan it, then it's going to be the cryptocurrencies because you can reflate those a lot faster. Look how quickly it went from 6,000 to 20,000. Smaller markets. ICOs can be brought to market. It did take a while. You know, the stock market and the real estate market didn't really catch fire. It took like 2.5, 3 years of QE, sustained QE and negative interest rates to really get that ball rolling. I don't think they want to wait this time. If the stock market falls down, yeah, maybe they can wait a couple of years to get that back up. But in the meantime, they don't want to be sitting and waiting. I think they want those crypto things to be going up because there's no rhyme or reason. They can just go up because they have to go up, and they're going to boost them to go up. That's just my guess. All right, makes sense. Bricks gold delivery, like you said, if they don't have the physical gold, it takes time. But for crypto, there's no need to deliver since it's in the computer. Well, even so, you can deliver it. I mean, they're talking about backed, if you were on last night, how there's going to be futures, but they're supposedly backed to buy the physical Bitcoin, whatever that is. Meaning that if you win your trade, you get the Bitcoin sent to you instead of being cash settled. Now, I'd imagine many people will opt for cash settlement. Many people will opt for, well, okay, well, I'll take my delivery, but I'll take my delivery and let backed hold it in their storage. And now all of a sudden you're at the point where a lot of people are probably holding their Bitcoin in storage and maybe not at a 1-to-1 rate. Who knows how that's going to work out? Jeffrey Gotts, it's an interesting point, but will inflating crypto help enough people to help the economy, or they don't care? I don't know. If you look at, I mean, this is the classic thing about QE. I wrote an article on this maybe like 5-6 years ago, was about how QE destroyed the millennials. All it did was it kept the baby boomers generation's assets, and what should have happened, what should happen in a collapse, is the asset prices go down because they're inflated because of an imbalance in the economy, meaning they should never have been that high. And now what has to happen is people should never have paid that much for those assets, for those stocks, for that real estate. And therefore, if you're one of the people who paid that much, then you are considered one of the people who's not, quote, smart economically. And the normal creative destruction is, okay, well, you lose your money, and someone who's smarter with their money will buy those assets at lower prices and maybe build them up or whatever happens. But instead what happened was the people that weren't smart, that in 2003, 4, 5, and 6 bought real estate overpriced and then borrowed money against their houses. What should happen is those houses should have gone down. They shouldn't have been boosted back up. And then young millennials could have bought them for $110,000. But instead what they did was they priced them out of the market. They said, well, we know you overpaid when you paid $220,000 for that house, and then went up to $350,000, and you borrowed $100,000 out of your house, and now the house is back to $110,000. We can't have that. So they arranged the bailout, and they arranged the QE, and they arranged the low interest rates, so that housing prices pretty much went right back up and priced the people that should have benefited from them. So you did not have a generational wealth transfer. the other way. You had the people who already had assets. It was designed to make people preserve their assets, and then the really rich people, they got even richer. So the middle class people who overpaid for their houses, they're happy again. They didn't really lose anything. It's just that they're older now, and they weren't wiped out, but the younger generation didn't get a chance to get those low prices. All right, let's see. What else? There was some more questions. Yeah, so do they care? No. I mean, I don't think when they do their macro... Actually, the question was asked of Yellen and of Bernanke, and that the recovery wasn't really in jobs, wasn't really in incomes, meaning the economy didn't cover, that asset prices were boosted. And that's really all the Fed can do through monetary policy, is help boost asset prices. And he said, well, a lot of people have 401ks and a lot of people have houses, so it did help everybody. Well, first of all, Renter Nation, there's 40-45% of people, they don't own houses. I went most of my life without owning a house, so I didn't benefit from that. And if you don't have a 401k, you didn't benefit from that either. But that was the idea, was, yeah, well, it does help everyone, because Trump does this too. Your 401ks, like everyone in the room has a 401k. They're doing better, and the same with housing prices. So they don't care. Now, will crypto help people? Yes and no. I mean, of course, not everyone's going to have it. And maybe when they launch these things and they drive another crypto bubble up, the people that are going to make money, who's going to make it first? All the Wall Street people, the bankers, the ones that are in on the ICOs, the ones that pick the ones that are going to go higher, the ones operating the trading platforms, the ones running the storage facilities. So there'll be a cottage industry just like there was in internet, the people working on it, programmers, there'll be jobs. So it's not like only the people who buy the assets that go higher will make money. But obviously a steel worker's not going to benefit from this. A cab driver's not going to benefit from it. But they didn't really benefit from the others unless they somehow had 401k or home ownership. But I think what they really need is they need, for themselves, that's their number one goal, is how do they maintain Wall Street, Silicon Valley, lawyers, attorneys? How does that class of people manage to continue to rake in the dough? They can't have it, well, trading volumes are down and equity prices are down, the bond bubble is burst, and we can't collateralize a lot of mortgages because there's fewer houses being sold. What are they going to do? They need another bubble. It's not going to be marijuana stocks. There's not enough of it. That's why I'm saying crypto. Yep, bank rates are upside. Mortgage rates hard to find. John Moore is here. All right. Be positioned for the next crypto bubble, says John. Cab drivers more likely to own Bitcoin than have a 401k. Well, that's true, too. And actually, there's more barriers to entry to having 401ks than there is to buying Bitcoin. And with a lot of these newer platforms coming out, that eventually, first will be for institution, but then for the regular guy, it'll be easier for somebody to buy small amounts of cryptocurrencies, because 401k require you to set aside a certain percentage. Your employer has to have it. So that's a very good point. And we'll see how all that goes. All right. Would you watch Mike Maloney's new? No, It's funny. Mike once did a video. He called me out because in one of the comments, I made a comment in one of his articles about one of his YouTubes. It was talking about the gold back yuan or the game changer. And I said, this is nonsense. There's nothing coming from the Chinese government that says that they're going to back the yuan with gold or that they're going to do anything of this sort. And it would be foolish of them to do that because they're based on credit. They're not going to want to hand out their gold just to get oil contracts denominated in yuan. I said they're going to have a yuan-denominated oils contract, futures contract. It's not going to be gold-backed. Well, everyone was saying gold-backed. He actually did a video or a minute into it. He says, and there's some people in the comments, like this guy who says this story isn't true. Well, I'll give you proof. And he starts citing articles that basically were just saying sources say. It's like, yeah, that's not a source. It's just a made-up thing. So I don't listen to him that very much. I like to listen to people who are doing analysis that's based on I have to see, you know, maybe, okay, I don't want to speak out of turn here, but in that instance, there was no source. So I'm suspicious if I'm listening to somebody and I'm not quite sure if these are cherry-picked facts or unsourced facts. And in that case, no one could point me to anything that said China was going to do a gold-backed yuan. It was a game changer. And what's funny is no one ever went back and said, nah, this didn't happen. We got hooked. They just carry right on. The next video comes out. The next story about why silver or gold are set to skyrocket. It gets tiring after a while. So I don't have time to watch another hidden secrets of the greatest wealth transfer to happen in the history of the world. Yeah, okay, Roman inflation, current inflation. Yeah, I got a denarius. I've done videos on that stuff too. It gets old. There's a lot of differences between what was happening in the economy when a Roman soldier got a silver denarius. You know, horses were transportation, period. I'm not going to get into all that again. You can believe a certain system. Once somebody creates their little world of what they're explaining to you, and of course, if they've created that world and they've created their assumptions and they provide you with their facts, well, of course it works. And then they repeat it to you, and then you repeat it to everybody else, and then you live in that world, and you think that's the world, and you think the rest of the world that doesn't believe that is not quite in step with the world, when maybe it's the other way around. All right, guys, well, thank you very much, and we will talk to you tomorrow night.